according to the Case-Shiller index, the leading measure to help calculate housing prices in the U.S. Home prices in the 20 biggest cities rose 7.2% annually in April. There's some good news and bad news there. The bad news, the housing prices have never been more expensive. The good news, that rate increase has actually slowed down from March. Our next guest argues that one way to deal with high prices along with high mortgage rates is to consider securitized loans when purchasing a home here. And for more, we welcome in Michael Bright, Structured Finance Association CEO. Michael, great to see you here in studio this time.
Yeah, this place is great. I'm coming here every time. This is wonderful.
Absolutely. We'd love to have you back anytime. All right, so first and foremost, as people are trying to digest the latest housing data that's come out this morning, you're continuing to make the case here for securitized loans for some of those potential buyers out there.
Yeah.
Why is that?
Well, securitization is actually something that happens in the back end.
Yeah.
So as a customer, you may or may not even know whether your loan is on a bank balance sheet or it goes into a bond or security, but chances are pretty good that it's going to end up into a bond and a security. That is why rates, you can get a 30-year fixed rate loan if you are in a country that only has banks. For example, like Europe and Asia, you mostly can get variable rate loans. They're not 30-year fixed rate, and they're much higher than where they are in the United States. What I would say to a borrower, to a consumer looking to buy a loan is, use a broker agent. Usually your realtor will have a relationship. They will shop for various options, and you'll probably get a loan at a lower rate than you otherwise would. Then they're going to tell you who your servicer is, and just work with that servicer, and that's the relationship you'll form over the course of being a homeowner.
How much of a difference are we talking about in the loan that you could get?
Well, it's difficult to know exactly, but I think if we had a country that didn't have any securitization whatsoever, interest rates would be, 2 points higher, 200 basis points at least higher. So right now we're looking at mortgage rates around 7 1/8. There's a psychological effect just because for so many years the Federal Reserve have been suppressing those rates and keeping them at around 3.5%. A lot of people are looking at the 7% and saying, oh my gosh, I got to wait for rates to come down before I can buy a home. That isn't something I would advise. I think 7% is still quite low by historical average. And if we didn't have, the bond market facilitating this, you could be in the 9-10% range.
What are some tips for those who are out there trying to reduce their mortgage as well right now?
Reduce their mortgage debt, or just
reducing their mortgage debt, trying to figure out where lower mortgages are sometimes available due to securitization, or even what their down payment consideration should look like.
Yeah, it's we have a very liquid market. For down payments, you don't need 20% down. You can get what's called mortgage insurance if you have less than 20% down. So you shouldn't be of the view that if you don't have 20% down, you're locked out of the market. But when you're making a home purchase, it really needs to be the right thing for you for the long term. So my advice to any prospective borrower or buyer would be, do you want to live in this home? Is it right for you? Is it right for your family over the course of, let's say, 5 years at least? If that's the case, then go ahead and buy. Don't worry about the interest rate. They're still low by historical standard. If you're just speculative buying, that's something I do not advise. I think that it's a dangerous place, and that's gotten us in trouble in the past.
I just want to end by getting your estimation or your kind of crystal ball outlook on where prices might continue to move. I mean, we were just diving into the Case-Shiller home prices deceleration that was marked in this most recent reading, at least. Do you think that'll continue here?
Well, I'm sorry to say that I hope so.
Okay.
Because even though I'm a homeowner, I really don't want houses to continue to be unaffordable for so many Americans. And we are at historic unaffordability levels. And really the reason for that is supply shortage. So we don't have enough affordable housing supply. This is mostly state, local level. There's a lot of regulation that limits how much affordable housing supply can be built. There's a national effort right now to fix this, but it is a slow-moving train. I hope over the next 5 to 10 years, we're going to be building more housing supply, and that'll alleviate some of this problem. But right now, there are just more people who want to own homes than there are homes available.
Michael Bright, who's the Structured Finance Association CEO, joining us here. Thanks so much, Michael.
Thank you very much. All right.